Okay, let's go over this AUD USD trade that we have right here for a nice 33.5 pips, risking about 11 pips, and it being an overall 3R trade. So what I want to talk about on this is understanding multiple time frame analysis and structure, the basis of trading, the beginner level to everything. But I think a lot of people skip this step, and I think that this example will really help to illuminate the idea that that is very important and that you need to understand it. So we're going to go back and let's start from the monthly time frame like we always do. So on the monthly, what can we identify? Well, if we understand structure, we know that we need to make higher highs and higher lows to continue to the upside. So far on this market on the monthly, we've created a high, a higher low, and now we've created a higher high. So we can expect a higher low in order for this market to continue up higher. Basically, this is bullish on the monthly. If we drop down to the weekly, what can we see? That even though we just had this break back down below structure, we're currently on this next candle on our way up. We don't know at this moment if this candle will come all the way back up and then create some more bullish patterns for us to get long in, or if it will just come back, retest this area and continue to the downside. But as for right now, the market is pointing up and is currently coming back up to retest some of these lows in here. If it'll break these lows, who knows? But right now we are currently making our way up. So the monthly is bullish, the weekly is bullish. On the daily time frame, what can we identify? You can see what we saw on the weekly a little more identified, but I do want to show you a quick tip here. Where did I get this line from and why did I put this line right here? Well, if we go down to the line chart, what the line chart does is take into account the closes of the candles, and that's what is plotted. So if we take this right here, take our line and we put it just below right here, what it'll do, it'll put this ray on the closes of the candles. And I'm using this as my support and resistance area, so my major structure area for this overall section of the chart right here. Now once I switch back to the candlesticks, as you can see right here on the close of this candle, we have our ray, and what it does is it shoots through, giving us a pretty good area for our structure, so for our support and resistance. Not saying that this line is exactly the support and resistance, but it is a good area. And if we look at the daily time frame, we can see that we are starting to make our way back up to this line. So a retest of this broken structure is imminent. That is a highly likely to happen. And if we are on the daily, we can see that we've had two bullish daily candles, and we are still bullish even though we broke below, because we had this retracement candle and then price tried to push back down. It failed to push back down, and then this next candle broke and closed the previous candle's highs. So we are bullish on the daily as well. On the monthly, we were bullish. We have been making and breaking structure to the upside. Not only that, if we do pull out our Fibonacci, what can we identify is that we are currently retesting the 50% Fibonacci zone on the monthly, which is a pretty good zone the market likes to come and retest if it does want to go ahead and continue the trend there. So on the monthly, we've came down to this 50% area, making higher highs and higher lows. Some of the same thing on the weekly. We broke structure to the downside and we are coming back for a retest. Bullish daily. We are starting to make our retracement back into this area. Now, if we want to use this area as resistance, who knows? Or if we want to break it to the upside, who knows? But we're currently making our way back up to at least this area is what I identified for me. So I know I have room to go from this candle to this line if I want to look for buys, but I need to make sure that all my time frames are in alignment before I buy this market. We want to work on our multi-time frame analysis. This is going to give us the best probabilities to win the trade in our overall direction if all time frames are pointing in the same direction. How much sense does it make to look at the monthly time frame, see that it's bearish, the daily time frame is bullish, the weekly time frame is bullish, the 4-hour is bearish, the hour is bullish, and the 15-minute is bearish? It's not going to be conducive or really give you an edge in your trading either way, long or short. You want to wait until the time frames, all your time frames are in alignment, so they're all pointing in the same direction. Now you need to understand structure in order for that to happen as well. So that's what we're touching on now. We need to make higher highs and higher lows. Simple concept, I know, easy, very beginner, basic guys, but you need to understand that we're making higher highs and higher lows, which means that we're not breaking these lows when we're in an uptrend, and when we're in a downtrend, we're not breaking the highs, continuously making moves to the downside without coming and breaking the highs. So that's what we can look to identify what phase we are in when we're trading. So if the monthly, weekly, and daily are all pointing in buying directions, are all pointing up, we want to look for buys on our lower time frames. And if we get a situation where we're not in a higher high, a bullish bullish trend, higher low formation, we need to be patient and wait. And we can identify that and understand that by saying, hey, if we go down to the 4 hour of this market, we've had a move up, breaking structure. So we broke this previous structure resistance right in here, broke it to the upside. Now that we're making higher highs, we need to make higher lows. Did we make a higher low? This was our starting point. Did the market break below that area? No, it didn't. After that, we broke the highs. We broke this area right in here. We broke this area right in here, created a higher high. So what can we expect? Until the market comes and breaks below the low, we are still anticipating the market creating a higher high. So that's what we're looking for on the 4 hour. You can see that the market structure has changed. We were bearish. We were making bearish market structure, which was not conducive for buying. You can see that we were making lower high, lower low, lower high, lower low, lower high, lower low. We were not breaking our highs when we were in a downtrend market. Now that we've made our way back up, we're starting to break higher highs and make higher lows. We're failing to break the lows. So until the lows are broken, we're still looking for buys. And now that the market has just broke and closed above this previous structure resistance, now we can look for a retracement in order for this market to create a higher high. Now we still have this ray right here. This is our area of previous structure support that should now act as resistance if the market does want to go ahead and continue to the downside. So we have a little room in here from where current price is now to this area before we need to actually make a decision as if we want to stay in this trade or get out of this trade. But for me, I like to take profits before that area. So my take profit is hit before I have to make that type of decision. I get all my profits, my risk to rewards are all met before I have to make a decision of if I want to close this trade or open this trade. So I could let one run and let it continue up to this area if I want to. If not, hey, I'll close my trade because I'm good with the risk to reward that I have. That's why I don't put my take profit at the final point that I intend the market to go to, because I want to close before that. If the market doesn't reach that area, you know, all that jazz, everything that goes in with that, the psychology behind that. So let's drop down on the 1 hour time frame. On the 1 hour time frame, you can see that we were creating bearish structure. So we lower high, lower low, lower high, lower low, kind of a higher high, failed to break it. We did not retest it, but we did make a higher low. And then once we created that higher low, one of my favorite patterns, we had the left shoulder head, broke below that area, immediately came back to the right shoulder area. And we want to see this area be used as support in order for the market to have momentum to come out of this area. What did we get? We got that once we broke above previous structure resistance. So where the market failed to break above before, we came back, retest that area, and then continue to use that as previous structure resistance, now turn support, continue our trend. So on the hour, where are we at? What phase are we in? We have created an impulse to the upside. So what do we need to do? Now that we've broken structure to the upside, we need to wait for the retracement to happen and then continue its trend. The market can't move in one direction forever. So if we play it forward on the hour, we're waiting for our retracement to come before the market shows us that it wants to continue to the upside. So currently right now, we could go ahead and take the long, but we're at the high, so I don't really want to take the long here because the market showed a retracement and we're starting our next impulse. But I don't want to take the trade at the highs. You want to buy low, sell high. Really simple concepts here that we're using on this YouTube channel. So especially about Asian session 2. So this is about 7 o'clock, 7 p.m. Eastern Standard Time. Not ideal to trade. I'm not trading then really either. So we've had more of a pullback, more of a retracement. Where did we get our retracement to? If we pull out our fibs and take it on this impulse to the upside, you can see that we came down to the first level of support that the market will encounter, which is the 382 Fibonacci level. That's all the Fibonacci levels are just structure levels the market will encounter on its way on its retracement before it continues the trend. So we like to see it hit at least the 382 before we look for continuations. We got a 382 touch. Now we want to wait for structure to change. We're currently broken below structure. If we started here, we made a low. You can call this a lower high, and now we've made a lower low. We don't want to be buying in those market conditions. We want to wait until we've had a higher high break of structure, come back for a higher low, and then a higher high again. We want to look for something like this in the market before we look to buy. Now we know that our monthly, weekly, daily, and 4-hour time frames are all in alignment so far. They're all correlating together perfectly. They're all bullish. So we want to wait until the 1 hour is bullish before we look for our entry on this trade. We've failed to get that. We've created a lower high. So not until we get this break above, where we break above some structure in line with the trend and all of our other in line with the trend and all of our other time frames, we've now got a break above. What can we expect is a higher low to be created. So dropping down on the 15 minute. Now that we've gotten our hour in alignment, we want to make sure that our 15 minute is in alignment, and I want to make sure that I have a proper risk to reward with a good trade setup. This is my entry time frame, the 15 minute. This is what I entered in on. So we're going to look for this market and identify where the best possible places for us to take this trade is. As you can see, we've had a double bottom right in here. If we do go back to the 1 hour, signs that the market wants to go ahead and continue to the upside. Now, if we pull out our fibs, what can we identify? We're still on the 382, using it as our support. And what did we get? We had a double bottom in this area. And we know a double bottom is a bullish pattern. We like to see the market continue to the upside from there, especially after we've had this big impulse, our retracement. We had a double bottom, which is signaling to us that the retracement is over. We're failing to make lower lows and lower highs. We've then broke above, we've created a higher high, and if we look at it, this is our previous structure resistance that was keeping the market below it. Once we broke it to the upside, we can now use that as support. Now, mind you, this is part of the program, so this was part of the program, this trade and everything, how to take this trade and how to look for it, find it, risk to reward, trade setup, and everything is in the program. The rules to how to do this correctly is in the program. I'm not going to show you all the rules, but what I can show you are simple concepts like this that I use to trade the market. Now, there are some other things involved to take this trade, but simply put, we had previous structure resistance, now turned support here. I put my stop below the low on my entry time frame, and then I went and zoomed out to my higher time frame, the 1 hour, and I found that this area right in here would give me overall like a 5R trade. I'm not here for all that. I want to make sure that my trade is complete and the take profit is met, and I have a nice and decent 3R risk to reward on it. So what I like to do is take my Fibonacci on the retracement, and I get two places, the -272 and the -618. The -272 is normally the first take profit, and the 618 -618 is normally the second take profit. If I go down to the -272, I've identified that this area would give me a 2R risk to reward, which I'm okay with. I'm very okay with, but I did see the potential in the market coming back to our overall area that we found on our higher time frame using multi-time frame analysis. So going along with the higher time frames, because our higher time frames triumph our lower time frames, we can see that there is a lot of room for this market to go. So I moved my take profit to the second TP, and that is where I look to get out of this trade and call it an overall winner. So if we go over, we look, we see AUD USD buy limit 75465, stop loss at 75355, take profit at 758. Everything lines up, everything matches perfectly. So now we are ready. We've gotten our take profit, our stop loss, we found a good spot to enter. We've already gone through the Forex Savant, FX Savant trading course, so we know what we're looking for. We have the rules and everything, and now only thing we have left to do is just let the market do its thing. So if we play it forward, what do we get? We get a nice and easy, perfect retest of this area. So we had market come back in, wick into this area, almost no drawdown, sniper entry as y'all like to say, and then the market exploded to the upside. We are risk free at this point on this trade, running about 1.5 R up. So we are risk free on this trade now. And once again, we just let it play out. Market starts to retrace a little bit, comes back. Same thing again, man. Where did we come back to? Previous structure resistance that was broken to the upside. We came back and retested it perfectly right here. Then we created a bullish structure again, breaking structure to the upside. If there was a re-entry, this would probably be my re-entry. I don't really remember this trade as much. I don't think I had a re-entry, or I don't think I stacked this trade, but we can see that the market plays forward. We come back, we retest this area perfectly. So if we were to have a position here, once again, sniper entry, as y'all like to say, stop below the lows. We're gonna go ahead and put our take profit at the other take profit. Since this is an add-on position, we want to go ahead and get out at our overall take profit of the overall position down here. So if there was to be another re-entry, this is exactly how structure and the market works. Higher highs, higher lows. Not until the low is broken and we start to see the market change its direction do we change our bias of the direction. Not until we start to see higher highs and higher lows being broken to the downside and creating lower lows and lower highs do we switch from bullish to bearish and vice versa. Nice and easy, man. Price breaks up, comes comes back, retests some structure, breaks higher. I didn't mean to do that one. Let me try that again. Nice and easy. So we got a higher high, higher low, higher high, higher low. Higher low comes back and retests. We got a higher high, higher low, higher high, higher low. Our higher high comes back and retests our previous higher high. Then from there, we have a bullish pattern. So a double bottom. We had the price come in here, failed to break, price come in again, failed to break. We explode to the upside, giving us more indication that this market wants to continue to the upside. Where's a good place to get in? Previous structure resistance that should now act as support right in this area. What do? Put your stop below the low on your entry time frame. Put your target on your higher time frame. You look for the market to continue its trend. So that's as simple and easy as it really is, man. Trading really is. Now there are a few things, of course, the rules to the strategies that I use to find trades like this and take trades like this. The link to that is in the description. I think that it is a very, very complete program and will give you all the necessary skills you need to continue trading for the rest of your life without any help. You'll be independent on your own and understand what's going on in the market. But yeah, it's simple concepts like this that are in the program that you can use to trade. That's pretty much it. A nice 3R, 33.5 pips on this trade. I think it did end up hitting this area. Yeah, so came back in this area perfectly. We had a nice retest of our overall target that we wanted to see the market go to. Yeah, I could have gotten a 5R position, a 5R trade on this. Would have held it for too long. It's not really my style. I like to get in, get my trades at a place that I expect the market to go to with no manipulation around that area. Then once it does, bank my profits. We go home and look for the next trade the next day. But that is it. I think I threw a lot in this video. Drop a thumbs up. It does something for me. That is a benefit for me. It does help push the video out to new viewers so they can come get some of this free content as well and start to learn and trade the market profitably. And then as well, make sure you are subscribed so you stay up to date when I do post any of this free education over here on this YouTube channel. But yeah, man, that's pretty much it. Do those two things. I'll holler at y'all on another trade breakdown probably coming soon. I told you we pumping them out. Trade breakdowns is coming. We got booklets and booklets of everything we're going through. So we're gonna pump them out. I hope you have a profitable day on and off the charts. And until next time, I holla.